Welcome to Smart Money Moves, your go-to channel for mastering money, building wealth, and understanding how the financial system really works. If you want to learn how to grow your income, reduce your expenses, and make smarter financial decisions, make sure to subscribe and turn on notifications so you never miss an update. In today's video, we're breaking down one of the most talked about topics in personal finance, how the wealthy legally reduce their taxes, and how you can start thinking the same way. When most people hear the phrase tax avoidance, they immediately think of something illegal or unethical. But the truth is very different. The wealthy don't break the rules. They understand them better than anyone else. In countries like the United States, the United Kingdom, Canada, and Australia, tax systems are designed to reward certain behaviors, such as investing, starting businesses, and creating jobs. Those who understand these systems can legally reduce how much they pay in taxes, while those who don't often end up paying more than necessary. One of the biggest differences between the wealthy and the average person is how they earn their income. Most people rely on earned income, which includes salaries and wages, and this type of income is usually taxed at the highest rates. In contrast, wealthy individuals focus on building streams of income that are taxed differently, such as investments, dividends, and capital gains. These forms of income often come with lower tax rates, allowing them to keep more of what they earn. Another major strategy is the use of deductions. Business owners, in particular, have access to a wide range of deductions that reduce their taxable income. Expenses such as equipment, travel, office space, and even certain everyday costs can be written off when they are related to business activities. This means that instead of paying taxes on their total income, they only pay taxes on what remains after expenses are subtracted. This is one of the key reasons why many wealthy individuals either own businesses or invest heavily in them. Tax credits are another powerful tool that can significantly lower the amount of tax owed. Unlike deductions, which reduce income, credits directly reduce the final tax bill. Governments offer these credits to encourage behaviors like investing in clean energy, pursuing education, or saving for retirement. Wealthy individuals are highly aware of these opportunities and make sure to take full advantage of them wherever possible. Retirement accounts also play a critical role in tax planning. In the United States, accounts like 401ks and IRAs allow individuals to defer taxes or grow their investments tax-free under certain conditions. Similar options exist in other countries, such as ISAs in the UK or RRSPs in Canada. By consistently contributing to these accounts, wealthy individuals are able to reduce their current tax burden while building long-term wealth. Another technique often used is income shifting. This involves distributing income in a way that lowers the overall tax rate. For example, income might be allocated to a spouse or family member in a lower tax bracket, or structured through legal entities like trusts or corporations. While these strategies must follow strict legal guidelines, they are widely used and fully compliant when done correctly. Real estate is also one of the most powerful tools for reducing taxes. Property investors benefit from deductions such as mortgage interest, repairs, and maintenance costs. Additionally, depreciation allows them to reduce their taxable income by accounting for the wear and tear of a property over time. This creates a situation where they can earn income while reporting lower profits for tax purposes. The most important thing to understand is that wealthy individuals do not rely on just one strategy. They combine multiple methods into a comprehensive plan. They also work with financial advisors and tax professionals to ensure everything is done legally and efficiently. The system itself is not hidden. It simply requires knowledge and planning to use effectively. Moving into more advanced strategies, wealthy individuals focus heavily on long-term planning rather than short-term gains. One of the most powerful tools they use is building structures that protect their wealth over generations. Trusts, for example, allow assets to be managed and transferred efficiently while reducing certain types of taxes. These structures are designed to preserve wealth and ensure financial stability for future generations. Another advanced strategy involves using debt in a strategic way. While many people see debt as something negative, the wealthy often use it as a tool. Instead of selling an asset and paying taxes on the profit, they may borrow against it. This allows them to access cash without triggering a taxable event. As long as the asset continues to grow in value, this strategy can be extremely effective. Timing is also a critical factor in tax planning. Wealthy individuals carefully choose when to sell assets or realize income. By doing so, they can avoid higher tax brackets or spread their income over multiple years. This level of control gives them a significant advantage when it comes to managing their tax obligations. Another important concept is tax diversification. Just like diversifying investments, wealthy individuals diversify how their income is taxed. They maintain a mix of taxable, tax-deferred, and tax-free income sources. This gives them flexibility and allows them to optimize their financial situation based on changing circumstances. Charitable giving is also commonly used as part of a tax strategy. Donations to qualified organizations can provide tax benefits while supporting meaningful causes. In some cases, structured giving methods allow individuals to maximize both their impact and their tax savings at the same time. Business ownership continues to be one of the strongest paths to tax efficiency. Entrepreneurs have access to deductions and incentives that are not available to regular employees. By reinvesting profits back into their business, they can continue to grow while managing their tax burden effectively. Wealthy individuals also invest heavily in financial education. They take the time to understand how money works, how taxes are structured, and how to make informed decisions. This knowledge allows them to adapt to changes and take advantage of new opportunities as they arise. Perhaps the biggest difference is mindset. The wealthy do not see taxes as something to fear. They see them as a system to navigate strategically. They focus on legal optimization, not avoidance, and they take a proactive approach to managing their finances. In the end, the strategies used by the wealthy are not secret or illegal. They are based on understanding the system, planning ahead, and making smart financial decisions. While not everyone will operate at the same level, the principles remain the same. By learning these strategies and applying them step by step, anyone can begin to move toward greater financial control and long-term wealth. As you move forward, the key is not to try and apply everything at once, but to start small and stay consistent. Begin by understanding how your own income is taxed and look for simple opportunities to improve efficiency, such as contributing to retirement accounts or tracking deductible expenses. Over time, as your knowledge grows, you can explore more advanced strategies like investing, business ownership, or creating multiple income streams. The goal is to shift from simply earning money to managing it strategically, just like the wealthy do. If you found value in this video and want to learn more about building wealth, reducing taxes, and creating smarter financial habits, make sure to subscribe to Smart Money Moves and turn on notifications so you never miss an update. Let me know in the comments what topic you want next, and don't forget to like and share this video with someone who wants to get smarter with money. And remember, financial success is not about how much you earn, but how well you manage and grow what you already have. The sooner you start understanding how money, taxes, and investments work, the faster you can take control of your financial future. Small changes today can lead to massive results over time, and the difference between average and wealthy often comes down to knowledge and action. Stay consistent, stay informed, and keep making smart money moves.